Good morning. My name is Andreas Vogelsanger. I'm the CEO of AFC Vietnam Fund. Today is the 21st of July 2020, and I would like to provide you with a short update about Vietnam and its current situation. As you probably are well aware of, Vietnam is one of the first countries which came out of the COVID crisis. And if you go now to Ho Chi Minh, to Saigon, and you look around, you will find the restaurants are full, bars are buzzing again, street life is full of people. So you would argue the domestic economy is back to normal. But of course, the COVID crisis changed considerably the consumer behavior in terms of spending, and that has also an impact on Vietnam. If you look at financial markets first, the VNI, which is the main index in Vietnam, is up this month 4.3%. For the year, we're still down around 10%. But the GDP growth in the first half was around 1.8%. So the economy is still growing, arguably at a smaller pace than last year, but we expect the GDP growth at the end of the year to be between 2.5–3%. But next year, in 2021, the GDP growth probably will be back to the numbers we have seen before, like in 2019, GDP growth was 7%. So at least at that level, if not higher. If you look at exports, exports are growing. They are plus 5.3% year on year in the first half. So the trade surplus is around 5.4 billion. This is over 3 times higher than the first half of 2019. That also leads to very strong foreign reserves. Foreign reserves are around 84 billion US dollar. And we expect that number to be over 90 by the end of the year. So that means the State Bank of Vietnam has enough munition or quite a lot of foreign reserves to defend its currency. That probably means the Vietnamese dong will remain a very stable currency versus the US dollar. If you look at credit growth, also credit growth is still positive. It's around 3.2%, which is around half of what we saw in 2019 in the first half, but it's a positive number, so that's good. And the PMI, the Vietnam Manufacturing Purchasing Manager Index, is also ending its contraction period, and the number is above 50 again. End of June, it was 51.1. So that's all. It's quite positive, and the manufacturing shift from China into Vietnam is continuing, if not accelerating. The current situation in terms of politics between the US and China is reinforcing Vietnam's status as a manufacturing hub alternative to China, and that will have a very positive impact. Also, they just ratified as the first country in Southeast Asia the free trade agreement with the EU, which is another very, very positive impact on the economy of Vietnam. So overall, I would argue the situation for Vietnam looks quite positive. And I think the next few months will tell how the global situation looks like with COVID, but we are quite positive that Vietnam will perform better than many other Southeast Asian countries in terms of economies growth and coming out of the crisis. So that's all from me. I wish you all a very nice day and hope to speak to you soon. Bye-bye.